Hello, hello, hello. Happy Friday. Well, not happy Friday. Maybe it's happy Friday if you're a bull trying to buy the dip because the week will be over. How is everyone doing? I'll be glad when this week's over too. Not from a market perspective, but from a personal perspective. It's been a doozy, but getting through it. Thank you for tuning in early. Next week should hopefully be back to normal, but look on Monday in case there has to be another early one. I'm thinking Tuesday will be definitely back to normal. So, hey Patrick, happy Friday to you too. Good morning, Anissa. Good morning, Jake the Snake. Good morning to people hiding in the background. Thank you for tuning in. Big thing today is August OPEX. August OPEX. If you haven't noticed, and I didn't really mention it this week because I can't show it for free, but we've been in negative gamma mode. Peak negative gamma mode, I believe, in the S&P is right around 43.20. So we're getting down to potentially peak negative gamma mode. Uh, Other than that, nothing. We have the rig counts for this for crude traders today, and then that is about it. You see the pre-market map is pretty red. Now we've had multiple days down going, and OPEX is generally some kind of potential bounce or chop, but I would not be aggressively trying to buy a dip yet. We'll talk about something else coming up. You see, utilities are the only positive sector today. Everything else, consumer cyclical technology. Look at the 1 week performance. Everything red for the last week. So this is definitely a shift in the markets, and I'm thinking it's a longer term shift, although I am watching more aggressively going into next week for a bounce and then another key rollover play. For Fed Watch tool, there are no rate hikes anywhere close to being priced in, and the only cut is still in May. Fear and greed at the lower end of neutral. So we're if we get a down close today, we could drop it into fear mode, which then I'd even more be watching for a minor bounce at least. Even with this, even with this, we're still above 30 on the Schiller PE. Even with this pullback, it's longer term. It's got a long way to go. I did not get a chance to look at John Deere. It's been a very busy morning so far. That's what I was going to glance at. But remember, we're at the tail end of earnings season. Let's see. Hey, Waka, hope you are well. Thank you for tuning in. Indices favoring the gap fill, which we do have. Thank you for bringing that up, Jake. You're early, so got a little bit of time. Well, I've been early all week, so I'm glad you made it one day. Thank you. Yeah, there's a lot. We could take a look at some of the stuff quickly. Jake, so we still have a gap fill left from beginning of June 8th to June 9th. Left behind. Here is roughly, this is a level that's sort of funny because 43.20 was a key level in the S&P before. That's what that red line is, and that happens to where peak gamma is. The key areas I'd be looking at if we push down would be the opening from that ninth, which is around 43.48, so 43.50, and then the close, the 43.50 area, and then the opening 43.41, 43.20, and then if you have a major full-blown meltdown, it's 42.98 to fill that gap. This, we should be setting up it's going to be interesting because to see from an Elliott wave, and I don't talk a ton about Elliott wave, this is either going to be a 1 or an A. If it's a 1, and we won't know, we're going to judge it based off of the bounce pattern. But if this is a 1, a wave 1, and it's going to be a 5-wave new impulse pattern, the bulls will not be happy. If it's an ABC, then bulls could be happier because we could stay at least in consolidation or get another stronger bullish bounce. We do not know yet. But based off the size of this push, if it is a new 1 impulsive move, over the next few months, we could see a retest of the lows from last October. So that's what I'm keeping an eye out. Now, remember, next Friday kicks off Jackson Hole. Jackson Hole, and you got Powell speaking. So next Friday is also key. I look at it sort of as the August Fed meeting because Powell is speaking without any potential rate hike. So we're going to have to see that, but we are getting an oversold condition. We have cycles at the bottom. Cycles are getting the bottom on the weekly. We are at the bottom of the rotation zone. So I'm watching where we close today in reference to about 43.45. So if we do dip down the open and we get a little buying pressure. Now remember, like I mentioned yesterday, we've had selling pressure coming in, and the 0-day options, the puts have been kicking in the afternoon where it used to be calls. It's now shifted to puts. Today, based off option expiration and unwinding some positions, I'll be watching for more of a mixed market with potentially some stronger swings back and forth. But on a closing basis, I'm watching for about this 43.50 area. So even if we dip down this morning, I'll be watching if we do get a bounce into the afternoon for that price action. Good morning, Sterling. Thank you for tuning in. Oh, also on the bigger picture, if we were making more of a corrective pattern and we get a nice B bounce and we get a C push down, I'll be watching. You can see here the overall, the channel could potentially hold if it's just an ABC corrective pattern that we're making. It could hold near some of these key areas below. And we do have the 50-week right around this 4,200 level. And that's really near where a prior, from the weekly perspective, you had this top from December, the top from end of January, the top from end of April, and then the breakout in May. So we could still come back down after that bounce and really test this area, and it would just still be a corrective pattern. Now, we start getting that bounce and a rollover, breaking the channel, breaking the 50, and a stronger push down. Remember, wave one can't be, sorry for the people who don't like Elliott wave, but wave one can't be the longest wave. It's generally wave three. So that's why it's going to be interesting to see how that potentially unfolds. NASDAQ, from the bigger perspective, not loving the channel here, but we can draw it on. We can draw it on from this area. Let's see, it's more, I hate when I can't get, let me see if there we go. So that area would be even well before the breakout of about 13,560. This is a weaker channel, so I would be watching if this is going to form another impulse move down in the NASDAQ. That's my longer term area. For today, as mentioned again, we have the gap. If it were going to do, if the NASDAQ went into class mode, it was going to do a full gap fill, 14,503. Right now, I'd be watching if we do push down in the open, I would not be targeting 14.5. Initially, it'd be about 14.580. That's where this support ledge, resistance ledge becoming support is. And then it'd be that 14.503. So, I didn't, you know what I didn't do for the S&P? Sorry about that. Resistance, now I'm watching the key close or the key open from June 23rd, which is about 43.75. If we have a stronger bounce and a weaker bounce, I'm looking at the close of the 26th at 43.68 if we do get a stronger in the S&P. Sorry, I missed that. For the NASDAQ, any bounce today, I'm really just focusing on yesterday's close, about 47.80, and then if it's a stronger bounce, it would be 48.63. Other than that, from a longer term perspective, you also see the rotation zone in the 50 hooking over. So, also from the longer term perspective on the NASDAQ, especially once it gets below, we're getting closer to the bottom of the weekly rotation zone, where we get a bounce more likely. But if on the next rollover, if we do get the next rollover and we don't just have buy the dip and go to recent highs, if we break through that, we still have a clear path move. And the target, the breakout zone for that clear path move is this 13,571. Dow hitting the bottom of the weekly rotation zone right now. See here, that's a pretty bearish week in the Dow so far. Where do we sit? We're still in a clear path move, so even on a bounce, I'll be watching for the Dow to tackle 33,960 area after the bounce, and then probably about 33,832. Today, I'm looking at yesterday's close on a stronger bounce, 34,536. Above there, the next level would be 34,637. Any stronger bounce for next week? You have the hooking over 50 and the declining rotation zone. And I'd be watching for another rollover play. Same comments that I went through with Elliott still hold on all these markets. We almost got to the 200 yesterday on the Russell, through it today. Russell's now in major support territory. If it does push down the open to about 1835 to about 1830 is key support. Russell, this is not good for Russell fans. If you're a Russell bull, if you're a Russell bear, or looking to trade this bigger pattern, I easily think after a bounce, we will tackle the 1742 after a bounce pattern. Do not look at the weekly rotation zones or anything there because we're in a bigger choppy pattern. You can still look at the daily rotation zones on the bounce. And yes, it is into a clear path move. If it gets a stronger bounce, it could get back to 1900 to 1911. But today, the target on a stronger bounce would be 1855. VIX, which we've talked about yesterday, closing still below this 1820 area, but today solidly through it and pausing right now at the 1880 harmonic. Now support comes in at 1820. Can't start watching overly on the bullish side unless we start dropping below that. And then I can't get overly bullish unless we pull below 1710. And I'm not just talking today, I'm talking going into next week. Next key is about 1950. And then major, from a psychological point, you see from a charting perspective, you see the closing area from the beginning of May, the closing area from the end of May, and we had that resistance shelf. So if we close, again, not today, but put this level down for next week, 20 is key. 20 is key. That can get a major shift even higher in the markets. The pullback level, again, is 17. The DAX, we hit the 87.5 today or yesterday. So remember, we closed back below the 62.5 a couple weeks ago. Little bounce, and then we hit the 87.5 rule. Now we're essentially taking out we're trying to take out the lows from July, early July. I'm still focused on a reconnection in the next week or so with the 200. All right, we can get a bounce here also, but my bigger bounce level will be 15,805 if these lows hold. There should get some minor buying pressure in here. It could be early next week. And then I'll be paying attention with the separation of the rotation zone and a return to it, and then a rollover play and tackling that 200, unless it utterly collapses today, which I'm not expecting. Notes. We stalled out yesterday, closing just below the 109.10, a little bounce, and I'm still watching for another rollover play here. If we get the stronger bounce, so it would be 110.07. Right now, it's easier to see on the yield because yesterday's yield tackled the high yield from last October. All right, so we had the little harmonic area and the high yield from last October. So far, we've pulled back. But really, as long as we don't get a close below the weekly or the daily rotation zone, which is back at 408, And it's even more bullish if you don't get the close below about 4.16. If it holds this breakout pattern and starts chipping away at this 4.32, if we break out from the yield, again, we put on the reverse harmonics a while ago, 4.461, which will be very interesting for the markets. Remember also, we've been in a bear steepening run, getting real close to that final target. But also, if we close above that 62.5, this bear steepening can continue. The only thing is that would change that for me, where this would go back into bullish mode, is if we get a close back below about 72 basis points on a daily basis. Otherwise, I'm still watching for, even on pullbacks in the 10-2s, I'm watching for the continued steepening of the 10-2s, which is bearish for the markets. Dollar index. Look at this. So far, 1 day pause yesterday, still closing above the channel, still closing above the breakout zone, closing above the 200 again, and trying to tackle some higher prices. If this continues, it's also bearish for the markets. The next target areas is 103.90, which would solidly break the channel, and then any pullbacks on this would be pullbacks, and this would be becoming key support. We are at cycle tops on the daily and getting to that on a weekly. So remember, we can still get some kind of sideways correction, but as long as this does not close back now below 102.20, it's in bull mode. Crude, which we have a little mini 4-hour potential double bottom, but that would need a 4-hour close above 81.08. Other than that, I'm still watching for a continued pullback or choppy consolidation because weekly cycles are at the top. And so far, 4-hour cycles, we have not been able to get a close above the rotation zone. And daily, I'm going to be watching if we do pull back bigger. There's a major support cluster between about 76.65 to 77.50. We start closing below about 76.65. Then it's more pricing in a global slowdown. But the dollar with rallying can have some still upwards pressure on crude. Natty gas. It's going to be interesting to see where this week closes. We'll take a look at that next week. Gold finally hit the 87.5. ICE don't have we're getting to cycle bottoms, so I'm watching for a bounce to see if these lows hold. So this is getting to a critical area. There's just not a strong buy set up yet. Other thing, 10 years on the, because we've had some carry trade unwinding pressure. You can see here we have a double top potential with the 10-year JGBs. The only thing that could ease this up is a close on a daily basis below 56.4 basis points. All right? Other than that, I'm still watching for upwards pressure. Now, if the Bank of Japan intervenes, that can change things, and then I'd probably think we'd get that close below 56.4, and we'd start getting a more substantial pullback in the US dollar, Japanese yen. But for right now, it's holding the breakout level. So, as long as we really don't get a close below about 143.80, I'm looking for bullish mode. It gets a little weaker if we get closes below 144.70. But if we base here, we could see the next push higher to the yen, take it to possibly 148.85, which is the high area from last October. You see it's in this range, and that's a key level, and that would fulfill the 87.5 rule. So watching for that closely. Euro, nothing really. I'm watching next over the next week and a half for a reconnection with the 200. Any bounce, I'm watching for a rollover in the rotation zone. Pound, looking, the double is not triggered. That would the only thing that would have made me short-term bullish. Watching for this to retest this low area, this 126.20. Bitcoin finally breaking down. Bitcoin on the bigger perspective, still holding this upwards channel barely. I'm telling you, things have shifted in there. It's getting some unwinding. There's not been the free-for-all fraud printing through the dollar pegged cryptos. So this is definitely changing in nature. Is this a weekly double top? Slightly sloppy, but a close below 24,750. And we could see a return potentially back to the mid 1800s. Where do we sit? PMG, good morning. I looked at a bunch of these yesterday. Amazon, people were talking about that real quick. By the way, if you didn't notice, there was this little, I don't know if anybody noticed this. This was a little wonderful 1 hour double, which went to full target yesterday. Now, the only thing that would make me watch for a more short-term bout, which is off the table, I didn't see where it was going to back down. I was going to watch this but it's off the table already. So, from the gap perspective, everybody's talking about, that full gap would be to 128.91. For structuring a trade, I would really watch 130.50. Okay, to definitely lower a stop or take some partial profits. That's a very key level ahead of the full gap fill. You could get a bounce there and then the next rollover. So that is definitely a key area. Thank you everyone from the chat for pointing it out. The spiders, next key area. Let me just see something let me just check something out. These are not the strongest harmonics, but since it is into this minor clear path move at the close yesterday, 434.35. We're trading below that, so that would be the first level on a bounce, and then the 431.50 area is actually key. Right in front of that, the key open is 432.35. So 432.35 to 431.50 is very key support. Resistance. Now, with the gap being there, you can use your gap harmonics. I'm not going to go through that right now, but 434.20, and then the full gap fill would be to 436.29. And the same comments go through for the spiders as I put out in the S&P futures. Any bounce play, we'll be watching for a rollover next week. The Qs. See here, through the short-term harmonics, coming into very key support, trading actually below that too. Wow. Weak sauce. So let me double check one thing. 353.15, 353.03. So there that gap was already filled. 355 is your key support level. 354.90, 355. You break below that, the next significant area is 352.70. But this is coming into key support where it's trading pre-market. So pay attention to that. The bottom of the weekly rotation zone is 351. So that's where that sits. Tesla, closing below the 50. The next key target is this 207. We're trading 214, which is the prior breakout level that we paused at the beginning of June. Little pause, and then we took off from there. So 214.60 area is key support. We do break below that. To watch on a closing basis, even for next week, 207.40. We close below there. Then I'll be targeting the 87.5 based off that rule, but the short-term target would be below 200 at about 197 to reconnect with the 200. NVIDIA still trying to hold this thing up. 422 is the support I'll be looking at today. In the other things, Apple closing at the harmonic yesterday. The next harmonic is 171.13 to about 170.50. And there's a pretty strong support shelf at that. So if we push down there, I'll be watching that area for a bounce going into next week or potentially today. And then any return to the rotation zone, we'll be watching for a longer term. My target is now 161.20, which reconnects it with the 50% harmonic from the run up from January's lows and the 200. So you see here, there's getting to be some technical damage. Also, Apple, unless it gets a super strong bounce today and can close back above 178, will close below the rotation zone. So keep that in mind. Things are getting technical damage on them. From these key stocks, it is the Magnificent Seven. The only one that's holding up the best is NVIDIA, but Microsoft, 315.75 hitting that yesterday. Now breaking down 312.92. 313.85 is the first level, and then it'd be for the gap fill, 316.88. But you see even this. Rotation zone's rolled over. It's broken a key support ledge. If we put the harmonics on from the lows here, and this was a nice 1, 2, multi 3, corrective 4, push high 5. So we have to see again, like I talked about the S&P NASDAQ, if we're forming an ABC corrective or if we're starting to form new impulsive waves. Longer term with Microsoft, I'm watching for a return to about 290 after some kind of bounce, especially even if we're doing a corrective wave, we could easily return to 290 in September. It's going to be super interesting. Sorry if you're not focusing on these stocks, but Meta, this is technically a double top that triggered yesterday. Breaking below key support. Don't be surprised on bounces. We should be getting to bounce territory either end of today or beginning of next week, but we'll be watching for rollover patterns. This could take this back to potentially 258 in Meta. Below the daily rotation zone, below the 50. All right, look where the 200 is on that with the 50% harmonic. Over the next few months, we could tackle that again, unless it's, I mean, this still has to get down. Now, the targets I'd utilize for Meta would be 267 for the first major target besides the stop decrease, because that's the bottom of the weekly rotation zone. But you're starting to see a shift in all these patterns. So we don't need to go through every one today, but that's where it's handy to watch the stocks that were driving it higher since the beginning of the year are starting to definitely break some key support and trigger at least some more short-term patterns. Is it good to buy? You know, I can't give you a specific trade advice. I'd be cautious. I mean, NVIDIA, you have your earnings coming out next Wednesday. You know, it's a gamble play because look at the PE. Unless they completely blow earnings out of the water, but if they guide anything lower, you're going to see a pullback. So my risk would be to the downside. So if I was doing anything from the bullish perspective, it would be for very, very short term, and managing risk first and foremost. All right. NVIDIA, yeah, we are in the rotation zones, tried to bounce, but if this starts breaking down, you have some clear path move. It's insanely overvalued. You see other chips, like remember AMD, which is at this double. The final target 102.05. We're trading pre-market 102.65. This double is going to be completed in the short term. Intel, it's another one. Check out Intel. It's trading at the bottom of the channel right now. But if we get a close, especially on a weekly basis below 31.38, Intel could reach, this is a valid double top. It would not only be below the weekly rotation zone, it would be below a major breakout level. It would trigger a weekly double top and the channel would be broken. So I'd watch for the pullback there. So in other chip makers, you are starting to get potentially bigger pullback plays. Keep that in mind if you're playing NVIDIA from the side, and NVIDIA from the bullish side, and NVIDIA's been in that whether you look at the Big Five or the Magnificent Seven, it's been one of the leaders. It's insanely overvalued, and the other ones are breaking down after their earnings reports. The only other one that's holding up better is Google. But Google, 128. See, it's a sideways channel with the daily rotation zone. It's still got a gap left behind from its earnings reports. Google is still not cheap. Now, it's not more insanely overvalued, but if it breaks down below 128 on a closing basis, we could see at least the gap fill over the next few weeks going into September. So that's the other one that, besides NVIDIA, the two that are holding up the best from my perspective are Google and NVIDIA. The other ones are, you're getting a lot more technical damage on them. And especially Tesla's in that group, and look at this technical damage. I mean, look at Tesla from a weekly now. Well below the weekly rotation zone. The weekly 200 is at 195. This is going to be a magnet number. If we especially close below that 207.50 area, watch out. And then, yeah, we can go back here and watch the next major area at 175.87. But first I'll be watching this 62.5. And yes, we'll get bounces in Tesla too, but the nature of this is shifted. Even if you don't use any other tool, just broke major support. And if you look at Apple broke major support, Tesla broke major support, Microsoft broke major support. Meta is triggering a double top. So if you want the bullish case, you're going to be wanting NVIDIA or Google. Back to Google. If you think there's going to be a stronger bounce, if Google breaks above 130.150, it could be a short upside play. About 134.50 would be the first target I'd utilize. But this, if it does break out, that could be a bullish play if you're looking at something, or potentially NVIDIA. The risk factor is earnings next Wednesday with NVIDIA. TSMC, Taiwan Semiconductor. What? Oh. Sorry, I'm thinking TSM, where I just had a brain fart there. TSM, remember that triggered the head and shoulders. That triggered the head and shoulders back on Thursday the 20th. Came up, kissed the neckline goodbye. First target hit. Next target, the one I'm really focused on, is 89.50. We're trading 90.69. That's where the 200 comes in. But any rally on TSMC, this is already triggered way back when. A bearish pattern. So you have semis are not something I'd be rushing into now unless they were a very short-term play. But anything could be bounce plays, and then you're going against a breakdown trend. I'd be more looking for bounce plays and then another rollover in these. And Sterling, MU. Then I'm going to have to wrap this up. The huge, yes, you have. I was thinking this double, but we do. MU still on this rally did not violate. It came down. Remember, that's more of a monthly pattern you see here. Though we have another weekly double within a double, but you look here, the overall monthly and MU triggered. So we've had that triggered. We've had a counter trend rally, and now on the weekly basis, this is a sloppy double, but you get a close back below 60.50 with MU. You could easily see a retest of the lows from last September and December and the first target from that monthly. Nothing I'm rushing into right now from semis. Hey, Richard. Thanks for tuning back in to watch Wolf. Wolf Speed. Honestly, I don't think I've ever looked at this stock. Let me just see from this key low. We'd already completed the 87.5 level. At this point, I know nothing about this company either, but from a pure technical area, trading 43.50, 39.02, 39 has to hold. If you break below 39, I bet you'll tackle the low area from March of 20. You have that massive gap down. You have the short term is 39, even if we're using the short term harmonics. It's reconnected with the 87.5 there. So that 87.5, I'd watch. That's going to be your minor support is about 43. You're above that slightly pre-market, but you start breaking below that. You know, it's not good. And any rollover play, 46.90, which is roughly the area of yesterday's high, 46.75. And then your breakdown level would be for 49.50. So on any rally, even there, I'd be watching for a rollover play. Looks like they missed earnings pretty well. They beat on revenue, missed on earnings substantially. They have no P/E ratio. And this pattern is definitely shifted. So I would not be, anything on the bullish side would be aggressive, and then I'd be watching for the rollover play on that. Since it's even on this last multi-week rally, could not really sustain. It got a little above the breakdown zone, but could not sustain it, and now it's rolled over. So it's stronger. Unless it can hold this 39 and put it in a short-term bullish pattern, I wouldn't be touching it just yet. All right. That's where we sit. Got to wrap this up. Went a little long today. Got to deal with some stuff. So I will hopefully be back at 8. Just check in on Monday morning in case I still have to do a 7:30. But hopefully things will be getting back to normal next week. Thank you for your patience this week. Sorry it's been disruptive, and I appreciate everybody's tuning in. I'll talk to you later. Remember, August OPEX today. Don't do anything silly because we can get some whipsaw moves, especially in the afternoon. Talk to everyone later. Bye for now.